Good morning, traders. It's 8 a.m. Chicago time on Tuesday, the 7th of November, 2017. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The stream seems stable these days. Looks like Comcast got their job done, so I can start from home. So I'll bump back up to 1080p over the next few days, see how that works. So you can get the full resolution on the stream. Overall, the markets are higher. The S&P is trading just slightly higher than where it closed yesterday. Actually, right, just a tick right now. But in the overnight session, the indices pushed a lot higher. I don't know if you all are watching crude, but yesterday, excuse me, yesterday crude ripped up to 57.61, and then in the overnight session in the U.S., it pushed even higher to 57.69 and has been sitting sideways, resting. Just a rip roar type of environment there in crude from the pit open yesterday. Um, it's been pretty intense in there. Overall, there's not much to report. The U.S. dollar is climbing higher. The U.S. dollar is approaching a 4-month high. It's trading up at 95.03 currently, with a high of 95.07 on the December contract. Also, oil is hitting a 2.5-year high on Brent. Brent oil climbed to 64.65 over political tensions in Saudi Arabia. Also, throw in the mix accusations against Iran of launching missiles and things like that, lobbing missiles at Saudi Arabia, and that is pushing that commodity much higher. Also, it's moving in sympathy with the dollar as well. Crude is priced in dollars, and so overall, the majority of the markets that I'm monitoring are either flat or down. The Bund is flat currently. The U.S. 10 years flat. The Nasdaq's down 2.75 points. The Russell's down 1 point. The DAX is down 12.5. The laggard today is the Euro. FX down 0.39%. The Euro trading at 115.87. 115.87 down 45 pips this morning. Along with the Japanese yen, which is down 26 pips. So mixed bag coming into today's session. So let's take a look at what we expected yesterday. Actually, let's take a look at what we expect today as far as news. The news flow, the only thing I have remaining here for today is the job jolts, the jolts job openings number, the prelim number for September, looking for 6.05 million. That's at 10 o'clock. And at 3 p.m., consumer credit for September looking for 17.5. And then as far as speakers are concerned, we're looking for ECB Speaker Villeroy at 11 Eastern and Fed Speaker Quarles, voter neutral. I haven't seen that name before, at 12:35. And then we have Yellen, Fed Chair Yellen, speaking at 2:30. So as far as speakers are concerned, 11 o'clock ECB's Villeroy, 12:35 Eastern Fed Speaker Quarles, and then 2:30 Eastern Fed Speaker Yellen. For speakers, other than that, you're looking at consumer credit at 3 and the JOLTS job number at 10. Here's what we expected yesterday. All right, so what we were looking for yesterday is a 9 points of range. I discussed this at length. I was looking for the market to drop to 83s outlined here, and then to ultimately push up into the double measured move, get tangled up in the double measured move for a good portion of the session, and then ultimately push through to 92 and settle at 87 or so. That's what I was looking for the primary trading plan and scenario for the day. Here's what we actually got. It's better to see it on this chart. So we pushed down to 82.25. The market ended up opening just a little bit lower than where it was when I did the trader bite. It pushed to the prior day's high. That became the opening swing. Pull back to mid. Pushed through the prior day's high. Pull back to mid. And VWAP pushed through again into that 87 area. 87.75 again is the oh, it's okay. 87.75 is the measured move, and here we are stuck at 87.75. What it didn't do is it didn't quite get to 92 on the upside. It stalled out at 25.90, and then it rotated down and finished at 88.75. Came back to 87 later in the session. The point of control for the session, not surprising, 25.87.75, this whole area, and here we have that P-shaped figure we're looking for. Very little tail, pretty balanced trade. The value area is valid today, and it's important to keep an eye on. Currently, the markets are trading at 25.88.75, right against yesterday's close. We are unchanged from yesterday's close in the S&P. And we have risen as expected on Hypo 1. So that was Hypo 1. Pretty much hit what it's supposed to do. Couldn't quite get to 92. It stopped at 90, and it pushed down to 82 and a quarter on the downside. So a little bit lower on both ends. When we were doing our trader bite, it was trading at 84-ish, 83.50, 84. And I was expecting a small move down before it starts to push higher. The secondary plan or scenario is a quick push up, tangle, and then continue, and then hold steady. That looks a lot more like what we actually got. We did get this shape that that I had drawn out, and then the third scenario is failure to continue higher to entice buyers to hold high and roll over into the mid and the IB from Friday's session before finishing somewhere around the 84 area. That did not happen. Okay, so that's what we're looking at, and then beyond that, we're looking at a market that consolidated until the Asian session opened, push immediately right off the bat, push immediately into 25.90.75, pull back to mid again, and then continue higher, and it has been falling since. The volume is pretty good for this overnight session. 168,000 is higher than what we would consider to be the most common volume at about 110 currently. It's below mid, it's below yesterday's high, it's below VWAP, and it's right at the point of control. The overnight profile is showing a clean taper. Look at that taper. It's just very parabolic. A very clean taper showing that as prices went up, the market did what? As prices went up, the market dried up. There was less and less participation at higher prices, so as prices increased, there were fewer and fewer contracts trading. That is a very clear sign of a dry up. So we have an impulse, very tight consolidation, continuation, and then the market just could not participate, could not find participants at the high. So we have a pretty decent high in place, and the market's rolled over, and it looks like today will likely be a balancing day with a potential test to the downside. That's how things are shaping up given the overnight session. We'll see how the underlying market behaves once we open, but that's what we're looking at currently. On today's plan, again, the trade is very, very tight. I keep having to expand the scale on my 15-minute chart, but overall, we keep building this profile higher. We still have, notice at the value high of this composite, notice how there's a very strong, steep drop off right here. See how that drops off? The volume goes up and it drops off. Let's change the color on it just so you can see it a little bit better. Let's make it a volume shaded. You see how that drops off right there? Okay, at value high. That's our initial support on the drop. That is going to be a very important target area. It's the 2580. 2580 becomes a very important target area as we head back down. But overall, the profile has been filling in to the upsides. You can see there it's filling in to the upside and continuously extending up. But we still have a long ways to go to kind of create balance up here. The yesterday's high was a weak high. As you can see, let's cut this. Let's get rid of this. As you can see there, this high here, which represents this high, relative to all the volume that took place all the way down on this profile, that high there is fairly weak. There's a lot that went off. There's a lot of trading that went off at the high there, and it does not signify. Now, the overnight high gave us a nice taper and rejection of those higher prices into 25.93.50, but the day session high yesterday was very weak, and it shows that the market had an appetite for that high price, and therefore we don't see that as rejection at all. That's a price that's likely to get retested. So that's what the profile is showing us. Very boxy, right in here, and it's a very thin volume above because we keep running up quickly, and so a retest of this 2580 is likely to get a bounce on the first try, and you better believe that that's an area that I will be looking to participate in a trade, looking for 3 to 4 points at least to pick up as the market rotates down there. So what do we got? So the measured move was at 25.87. I forgot to send the next measured move up as I promised yesterday. Got really busy, but this morning we're opening on the edge of the prior day's high. The expectation is for an open auction that starts to push up. I expect this high to be taken out at 25.90, and I expect the market to hold steady, consolidate, push the overnight high, and then start to move down. I'm looking for an impulse down on a new high test, and then for it to start moving towards the 25.80 area. That's the primary scenario for today. It is doubtful, it's possible, but it's doubtful that we take out this overnight high, even though I have it drawn this way. And the problem is that we're at 25.89, and 93.5 is only 4.5 points away. That's just one rotation, so it's too close to ignore in terms of the overnight stat and the trend being just a rip roar continuation higher. So I have to go with the trend, but the overnight session is showing a nice taper at the high, and it's showing weakness at the overnight low. But I do expect this high to be taken out on the first scenario, and then for the market to fail back down. There's a potential that we don't take out the overnight high, but as it pushes up this morning, I'm going to be looking for on my S5 Bookmap. I'll be looking on the heat map to see if there's anything I can lean against to get short. And what I'll try to do is get a screen capture of that execution and show it to you tomorrow if possible. The second scenario, open auction, push that high, get an impulse down, okay? Get a bounce at value low. Value is valid. Consolidate and then start to push down into this 2583 from yesterday, 2580 for the bounce. That's scenario number two. Scenario number two is looking bearish, is looking for the key moves to be downwards. I'm looking for failure. So if we push into the prior day's high and we fail to continue higher, I'm going to look to sell and look for that rotation to value low. Value low in this scenario. Where is the outline? Value low is right there at 85.75. Value high 89 and a quarter. So that becomes the initial target down right here. So looking for a couple points there, and then looking for 3 to 4 points at least on the push down to 25.80. This is the better play from a trade management and returns perspective, but we'll see if the market's able to produce that. I'm out of time. I'm going to leave you with that. I need to reconfigure this broadcast so that it's more inclusive. I do want to keep it to 10 to 15 minutes out of respect for your time, and so you can do your own prep or visualization or silent time before the open. But I do want to cover the Russell because I do like that product better, although we have been seeing some pretty decent rotations in the ES. I'll leave you with those thoughts. Good luck, and I'll catch you tomorrow morning. Take care.